Hi friends, I'm Rocky Outcrop. This is Bitcoin Technical Analysis. Thank you so much for joining me. I really do appreciate it. In fact, I'm going to just pause and fix my hair a little bit. And I'm back. Well, I don't know if that's much of an improvement, but let's take a look at the charts together. Thank you so much for joining me. I really do appreciate it, by the way. I don't know if I said that already. I think I did. I really genuinely do, though. So here we are checking out the charts, and this is the CME chart that I have up behind me, and there are some interesting things to note right here on the chart, right in front of our very faces, and it's very interesting and easy to see. If you've been following along with the videos, then you'll already have an idea what I'm about to talk about right now. If you haven't, then hit that subscribe button, hit that bell, all that good stuff, and you'll be well versed when it comes to technical analysis. Okay, let's do this. Pardon me. So what can we see here? What can we see right here? I'll just bring up the screen, bring up full screen. And what can we see? Well, very clearly the prices have moved beyond the downward sloping yellow line that we had on the charts here. And if you remember then last week when we were looking at it, it looked a little bit like this, where we had a sort of wedge type shape. Talked about it coming kind of dipping out of it back into the wedge. Structure was between the upward and lower line of this thing, and now we find ourselves above it. So isn't that quite interesting? There's a couple of positive things that can be taken away from this right here, right now. And the first one would be that if we were to draw in a measured move off the back of this wedge, now bear in mind as well, this is a CME chart, so there's more detail than just this. But if we were to draw in a measured move off the back of it, maybe we could be looking back up to somewhere around about our previous highs if we were to get the full shebang off of this thing. Now, if we're not to get the full shebang, as I've just called it, then maybe we're looking at instead a 60% move. Now, that's what Bulkowski would say himself. So I just take another stick here and put it on and then draw it down about 60%, let's say, more or less. And where are we looking to? And it quite clearly comes down to these two previous levels. So what I'm actually going to do right now with this thing, just to kind of clean it up and make it easier to understand and make it more intelligible for people, I'm going to move these two lines around to show us two lines of resistance, okay? Or profit-taking lines, as we would like to call them. So this is something, of course, that you can do on your own very easily. And you can see this comes in at the big high up here, the mid 12Ks, and this comes in at the next high at the 12,100 area here on the CME chart. So let me just move these around so that you can then see how this could be operated, how you could do this at home yourself, just to make life easier for yourself. You know, when it comes to trading, because people often see how to do things, they get an idea of how they could do things, but they don't necessarily know how they could make their own lives any easier off the back of that knowledge. And this is maybe just going to help carry you through to that next sort of level when it comes to doing your own trading, okay? So I can now remove this lower line here and I can remove this top line here and just identify two clear areas up above us in terms of the resistance up above and perhaps profit-taking lines should we go there to visit those areas. And I think that this is a fairly interesting study for us in a sense, if you will, in terms of horizontal lines and things like that too. Now, I was asked in a recent video to show how I draw in horizontal lines in terms of support and resistance. And of course, there are many ways of doing it. And this could be considered to be one of them, although this could be also considered to be a somewhat advanced level or a technique of finding your horizontal levels. And actually, you know, these have both got reasons for being on here, which go beyond just the scope of looking at what you might normally look at for a horizontal level. And if I go back over to the left, you can see how these things tie together. And actually, how about I take a couple of horizontal lines instead and pop them right on where we have those two things, so we can see over to the left how that ties together with the previous price action now as well. So if I just go back to the crosshair so I can scroll over to the left, this is the 24-hour time frame, and zoom on in a bit, you can see where these two lines come in at in terms of rough areas and of the previous price action and resistance and whatnot. And you can see that there was a little bit of an inflection in and around this zone just here. In fact, there was a gap created on the charts that was filled in again shortly thereafter. I think, if I remember correctly, at this time here, just on that same day, it was filled in. Although we are talking about remembering back to about 13 months ago. So it's not it's forgive me if I got that slightly incorrect. And then down here, of course, you can see that there's this other point of inflection in the markets. And the wicks here in this candle over on the 5th of August, 2019, for instance, show us the sort of the range that you'd be looking at as well in terms of potential profit-taking zones. And I think it'd be bearing in mind that we can see this. I think it'd be fairly wise to think about these two targets over back to where we just were in terms of profit-taking targets should we see the prices move towards the top side. Okie dokie. key. And that's fairly interesting. So what we're looking at here then indeed is two horizontal lines that are based off of profit-taking targets off the back of measured moves from a fallen wedge, which is a bullish pattern on the prices up above. Handy? I think so. Cool. Nice one. Remember to hit that subscribe button and come back again for more of this type of content as well, because I think the context that we put on the technicals when we're talking about them is probably quite useful for people rather than simply focusing on, rather arbitrarily selected lines. Okay. That's our top side. Now let's just zoom in a wee bit and take a closer look at this price action here and see whether there was a gap on the charts or not. And the way I'm going to do this is just go down towards the 1 hour time frame so we get a closer look at the candles and see whether or not that was filled in yet or not. And if I zoom it all the way out so we can see how this was operating, then maybe we'll get an idea. And now, of course, there is a distinction between 24-hour gaps and otherwise, but on the 24-hour time frame, you can see that candle was positioned somewhat further away from the body of the previous close than your average candle, and it's worth looking at maybe in a bit more detail perhaps. And you can see then in this zone here that there does seem to be a gap created on the price action in terms of the hourly time frame at the very least, going all the way down to 11,645, and that's at $100 down from where we are just now on the price action. And that's something that could very well be filled in, so that would give you a sort of downward price target. And I can put in a little horizontal ray just here to give us an idea when we go back up to the 24-hour time frame what that looks like on the bigger picture. So the bigger, broader picture, which shrinks things down because it's broader, makes it smaller, whatever, it depends on how you want to actually sort of what semantics you want to use for that. Okay, so there's that horizontal line for us. And if we go up to the 4-hour time frame, is that still showing here on the charts? And indeed it is. Now if I go back up towards the 24-hour time frame, do we see that there's a gap on here or not? And as you can tell, because of the way that prices moved up during the day before that gap was actually created, and then where the prices have dropped down to so far today, you can see that it's almost been filled in. But if I stretch this right the way out, make this very much, very, very, very stretched out as I talk away here, very stretched out so we can see it in a bit more detail. I'll zoom back up to the prices and just kind of point out the fact that there still remains a tiny wee gap on the charts, very much easily overlooked when you look at the wicks on the previous two. So there's the gap on the hourly and the 4-hourly that would down towards the lower side. And if I keep going up, you can see the wicks that was created by the price action in the day before it closed on Friday. And keep on going. I apologize for the length of time it took me to do that. But you can see now here, as I zoom the prices back down a little bit, back out a bit, you can see that there still very much is a gap just in this area just here. So I'm going to actually put in a little rectangle in this area as well, just to show us where we have a gap on the 24-hour time frame. So just draw it in like that, up to here and go across. So when it's on this extremely zoomed in format, you can see that there is a gap there. And of course, that only goes for the space of $5, but it remains on the chart. So if I just go back then to how it would have been normally when we were looking at it before, you can see that very much there is indeed a gap on the 24-hour time frame, although it is of course very, very small. Now if we were to fill in this gap on the hourly, of course that would take care of the daily one, but the daily one could be filled in while this hourly one remains on the chart for some time. So you've got a couple of kind of entries if you want to sort of manage your risk in around those sorts of zones for you, if that in turn turns out to be the case. Other things then we can look at in terms of interestingness about the prices are indeed that we are above the 21 EMA here. I apologize, above the 21 EMA here on the daily time frame, and that is of course a positive indicator of the trend. Now that's good to see in a sense, because of course that means that we've come up and managed to contravene the downward bearish price action of last week, when we were coming down towards the lower end of this descending wedge that we had on, what we spoke about earlier, and it looked like we could have been getting opens and closes below the 24-hour time frame, so we had a close down here below the 21 EMA on the 24-hour time frame. Then we had an open below it, but it went back up above. The following day we had a close again below it in this red day. Then on the Friday we had a green day that took us up above the 21 EMA again, and now on Monday we're very much positioned up above it, and we could fill in both of these gaps below us without actually going back down below the 21 EMA, although I would keep an eye eye on for that to happen if we were to go back down again. Bear in mind, of course, that if we do go down and then fill in really either of these gaps, that at that point you could be looking at coming in and challenging the upper side of that fallen wedge on for a back test of it or a retest of it. Now, I don't use the word back test normally, but I use it just because people who are tuning in for the first time might have heard other people say back test, but the actual technical term should be retest rather than back test. Okay, cool, nice one. So I'm sure you're getting some value from this episode and you want to hit the subscribe button, and that is of course welcomed, and that bell of course, that is of course welcomed as well. Now let's go over to the spot prices, but just before we do, I want to point out that we're on the last day of this month and the first day of a new week. So if we go up to the weekly time frame, you can see that we have this there's no gap here in the weekly time frame, but of course, you know, we have this little green candle which is positioned above the body of the previous week, and that is kind of, you know, somewhat bullish in a sense, but really we haven't achieved a great deal in terms of the bullishness of this looking at the oscillators and everything else as well. We're not really positioning ourselves in a way that we've become really bullish quite yet, and part of that is obviously because the week has just begun. It's only a handful of hours in the grand scheme of things. 11 hours and 41 minutes into this new week. So, you know, we're only really just getting begun here, but this is the start of a new week. But what do we have as well is the end of a month. So this is the monthly candles, and you can see we've come up towards the end of this, and let's check in with how this is all panning out compared to the previous highs and whatnot that we have on the charts. Now, it's been enough time for us to be able to say a couple of things of, you know, because of the closing out of this month, of the previous month, this being July here, this candle I'm pointing at just now, and then this one, August, we can say that, of course, we have very much confirmed that we've got a higher high on the monthly compared to our previous highs over here in February, and that is very positive for the price action. Of course, we'll look at this in the spot prices too, because there are differences, but we've not quite put in that high yet in terms of closing out the monthly compared to the previous one. So we have done a couple of things which are of note. For instance, currently we're positioned up above the previous month, and that's good, and things are looking okay. And if we were to get a big rise up and go towards either of these two targets, then that would put us in a position where perhaps we could be challenging our previous monthly high, and that would be good. So if we did this today before the close, then that would be interesting. But perhaps maybe this has given us a chance to get up towards these areas and you know, to spend some time up there rather than go all the way up there just today, just to sink back down and have a red month next month, you know? So there's that kind of dynamic on the go, worth bearing in mind and thinking about things like that over the period of today and tomorrow as we go between the months. But what does that mean, though, in the sense that we've come up here and we've not put in, and if we don't close higher than this 12,600 area, and then we did get a red candle in the next month, what would that start to look like? And of course, I would like to say that would look like, what would it start to look like very quickly? But in terms of the monthly time frame, nothing happens very quickly. Okay, so but what would it start to look like, you know, perhaps towards the end of September, should we not see the prices going any higher? And in fact, you know, perhaps even if it's going closing below this monthly candle over here. Now, this is a small monthly candle. So because this is small, it does open up the opportunity for us to actually close below even the body or even the wick of this previous candle next month, and that would confirm this perhaps as a local high. And if that were to happen, then down here on the RSI, you can see quite clearly that there would be some bearish divergence looking between these 2 points here, between June 2019 and, of course, the current area, the current closing period here on the RSI. So that exists. The MACD doesn't have any data on there. Why is that? Let's just see. Well, it just doesn't have enough because there's not enough history on this particular chart for that. Fair enough. What about the DMI? How are we looking in terms of divergences on this one? Now, this is obviously where things get a little bit more complicated, as I've spoken about in recent past, but what you're looking for would be the highs, and let's look at the DM positive for this one and say that while up here in the 3rd of August, we're higher than we were on the 3rd of February, as we spoke about, and that in itself is not divergent, and that's positive. Looking back towards the June 2019 area, should we then see negative price action next month, you'd have to be equipped in advance with the knowledge that that would be a bearishly divergent top that was coming in there at that point. Okay, so that's just something to bear in mind. And if that were to be the case, then you'd be looking at a high followed by, you know, a lower high and a lower high essentially on that chart. Let's dive on over to the spot prices and working our way back down the way then this way, taking a top-down approach to the chart so that I can kind kind of, draw out the same story, but without having to sort of, to do it with a bit of contrast here, so that we can work top down here as we did top bottom up there on the CME charts. Okay, so we have this line drawn in here in the past, and that's showing us where if we were to come up to this area and close in and around this line, first off, we've got this resistance point here. Movements past this area could be quite bullish for us, but is as well indeed just an area to be aware of that, pardon me, we haven't managed to successfully get above, despite the enthusiasm over the period of the last 8 weeks or so. And of course, things kind of last a bit longer. Now, I was out in the garden earlier on, and I was planting, actually, no, it was yesterday, but I was scattering grass seed around on the ground. And I was thinking to myself, is there enough time left in the year for this to really take growth? And I was looking over to another plant that was growing in the garden, willow, and I'd cut it down because it had some sort of disease growth on it at the top of it. You might be thinking, what the hell is this extended metaphor about? Forgive me. Well, if you're looking at that plant last month when I cut that down, it's actually grown up significantly since then, benefiting from the healthy cut down and pruning of it that I did, while we're still within the guts of the summer month. And I'm looking at the grass seeders and putting down and thinking, I'm glad I cut that other thing down last month and given it a chance to grow up healthily again, since without those diseased parts on there, that was a healthy retrace back then when it needed it in terms of that plant. And maybe the grass seed that I'm putting down here is a little bit tinged with hopium in terms of whether or not that will properly grow out before the end of the season. Okay, fair enough, right? And the same thing applies here in terms of the big time frames and the enthusiasm that people have as the sun really starts to shine through the window. The lower half of my face gets bleached out on the camera and my eyes squint closed, and now I can hardly see a thing. So anyway, the healthy retraces they have, and the enthusiasm. So when I'm talking about enthusiasm and things, I'm mentioning, I like to think about things like how there's those adverts around. And you might have seen it posted around on Twitter and things like that. Binance, for instance, reposting an image from a few weeks ago about how Bitcoin is taking over London, and a picture of a London bus stop with an advert for Bitcoin on the side of it. And you might remember as well, back when the prices were up there in the 12,000 area on spot, I was mentioning to people, and for instance, over there on Twitter and things like that too, that it was a little bit wary. I always get a little bit wary when I see big companies like Grayscale and stuff like that promote Bitcoin using paid advertisements, taking out a full spread in the Financial Times, for instance. Galaxy Digital did, and they took out a full page full of black ink, an expensive printing page that was for the FT, and advertising Bitcoin at the very, very top of what was the top of the market there. In retrospect, looking back now, prices up almost $1,000 from where they are now. And I'd say it's a bit wary because, they don't be advertising it like time to get into Bitcoin back when the prices were down at 4K, which they very much could have, as we were advertising essentially on the channel here. Instead, they wait until there's been 2 periods of growth and things have got to the top end of it. And I get a little bit wary when I see that. So which makes kind of comes into this area and says, we would really want to see the prices push past this area to justify those adverts, to make me think that I do have an Indian summer coming along here to make that grass seed grow, and for me not to look back over that willow bush, which I pruned back over a month ago now, and which had subsequently grew up during the times when it had more sunshine, and that than to do it now and to be getting in a bit late to the party. Okay, so anyway, that's that. We've got a monthly close coming up. Will we achieve anything? Well, we are higher than we were previously over here back in June. This is as opposed to over here in the CME chart where we were lower where we were in June. Right, bearing this difference in mind, and we have come up here and we've put in a lower high on the RSI. The stochastics, let's just see, it's lower as well, and the DMI very much lower, and the MACD lower, because we have all that price history to give us that information. And what does that mean? 3, 2, 1. Bearish divergence on the monthly time frame, unless we see continuation, right? So this is premature to say so, but unless we see continuation, then that's what that would be. Follow through next month in terms of downside price action would, of course, indicate this is a local high, in which case it's a bearishly divergent local high on the monthly time frame, which is a significant thing, and not a lot of people, in fact, almost no one will be talking about that. And now you are forearmed with that knowledge. Looking over here in the weekly time frame, we have a slightly negative start to this week. Just checking in again with the CMEs, where you can see this is green and we're above that gap on the spot prices. We're having a slightly negative start to this week, which is again slight difference. Where we finding the prices back down below this horizontal line that, of course, we drew in the previous week's episodes of shows talking about that sort of thing, right? So then let's just continue to check in with this one and say that, well, compared to this highs over here in February, we're not bearishly divergent, but compared to the last highs over here, really in terms of significant inflection points in the market, really significant area here in price action, it is not managed to come up there with that same strength towards the top side as what it had then. If you remember back then as well, people were very much very bullish, while then things turned out over the period of the following month to actually get quite bearish without people really realizing until it was too late. If you remember, then actually, this here momentum towards the top side doesn't really exist here. But is this just then a more organic movement towards the top? Time will be the thing that tells us the answer to that as we look at things moving past this point, if we do go on up or not. Going down towards the 2-day time frame then, didn't look at the 2-day on the CMEs, but over here in the 2-day, you start to get a picture where if this line here is only tested and then retested and broken again towards the downside, if we do get follow through towards the top side, then what you'd maybe have here would be perhaps a shoulder here, a head here, and a shoulder here. We can bear that in mind when we go down to the next time frame, while this is indeed continuing to be sort of bearishly divergent. If this higher high comes up and actually goes in higher than it, then the question will be, well, this is no longer a head and shoulders type pattern, but what will happen between these two highs? And will there be a subsequent twin peak double topping type pattern here, or will we push past the previous high at 12,300? Okay, because that's what you need to see happening, or else you're going to have these bearishly divergent things and bearishness kick into the market. And again, like I say, you're going to see this mentioned by other YouTube channels and other people on Twitter and things like that over the period of a couple of weeks, looking into mid-September. This is us looking ahead and seeing, because most people don't want to give out this information for people for free, because it's far too good and far too knowledgeable, and I don't want to blow my own trumpet too much, but people don't want to. And of course, I'm also telling you not the bearish scenario, but the bullish scenario too, and which would make it a real bullish scenario as opposed to the hype-based bullish scenario, which is what this period previous to price action was, which was bearishly divergent. Looking down towards the 24-hour time frame, and bearing in mind then that we're above this as a golden cross as well, just going up towards the 2-day. You can see we had this kiss here, and then it crossed over, so we had this golden cross on the 2-day time frame, and we haven't actually tested the 50 simple yet. If we did have follow through from a head and shoulders pattern, that would take us down to test this 50 simple. You'd be looking for it to hopefully turn around there at those lower 10,000 areas, if that were the case, and a full sort of play out of this thing as a medium term reversal pattern, as opposed to a long-term reversal pattern. Looking over here at the 24-hour time frame, then the golden cross scenario, which has been on the go ever since. We've come up and we've tested this 50 simple, been below it, up above it again, whatever. It crossed back over here in May, and the golden cross happened there, and we are actually still up above this area. But if we were to come down and test this one, then we're back into this parallel channel towards the downside, and perhaps looking down towards these other areas. As you can see with our horizontal lines on here, they've very much been respected, and if you were tuned into the channel and subscribed, then you'd have known very clearly that that is indeed a level in terms of making a low risk management area for you in order to manage your position. Now, looking at as well, zoomed in again, you'll no doubt be curious to see where we are in relation to the purple parallel channel we had in the background. It was just operating in terms of topside resistance for us, and we've come in here and we've just been touching it so far and not managing to break into it, and that is of course key so far for us in terms of the top side. Okay, now again, I want to reiterate and underline the point that I'm giving away a great deal of value, massive amount of value in this episode, and again to say hit that subscribe button, because what happens sometimes is I make out these episodes, I do a lot of effort into them. As you can tell, it's taken a lot of effort on my part, and I'm happy to do it, by the way, so no, don't feel bad. But people sometimes would say something down below in the comments like, what are you doing? You're not telling me anything. Up or down, what's it going to be? Well, that's not how you trade, that's not how you manage your risk at all. This is 100% risk management and 100% useful technical information, and I think you can see this. I think you can see it right playing out in front of your faces. I think you can, as we look at this live together. And then there's this idea then, the concept of perhaps of whether or not we'd have a turnaround, and whether or not this could be some sort of distribution type top on the go. And if you want to make a comparison between that sort of shape of that thing and other ones, well, this is more got that rockety sort of rocket ship head and shoulders aspect to it, or perhaps not even necessarily head and shoulders, but you can see what I'm talking about here in the February highs. And if we go back over towards the highs over here last June, then you've got these couple of topping type patterns, and where we came up here, we put in a lower high than the previous ones and whatnot over there. So would we see any of that happen here in the next while? And that's what I'm talking about. Movements past this area into this zone. First off, the 11,800 area. Your next two targets have got to be 12,222 and then 12,700 or so in terms of your top side, right? That's where we are right now. Looking down the way then, let's skip the 12 hours and go towards the 4 hours. In fact, no, let's look at the 12 hours and see if there's any more sort of divergence or anything on the go for us. And we can say this is a downward trend so far, because until we've actually gone back up above this fuzzy grey line here at 11,800, what you're looking at is indeed just a further lower high. Looking at this here, we can see that we've got a high that came up as high as this, a high which has come higher on the RSI, but despite that, we've actually not gone any higher here on the price action. Therefore, you have that bullish you have that hidden bearish divergence showing up here on this high here. So that's what that is. It's hidden bearish divergence. Looking down towards these lows, here's a low and then here's a subsequent low. And as you can see in the RSI, that is not bullishly divergent. You do have it on the MACD or the stochastics, and the stochastics here are not showing that hidden bearish divergence. And you can tell that that's the difference between in terms of how these things are calculated. Now, I'm not going to go into detail on that, but this is how these things are calculated is kind of giving you the idea about why this is, and it shows you the momentum that we've got towards the top side isn't particularly strong in the sense of a trending effort. But in terms of oscillating in a sideways market, this is going along okay. So really what this kind of signals to you is perhaps that there could be more sideways action to come, which people might not be anticipating quite yet. And how would that look on the charts? Well, there's a number of different ways that would look, and we've already covered that in the terms of the monthly candles and the weekly candles that we already talked about at the start of the show. I hope you're able to tie that all together yourself and create that narrative across the time frames. Again, this episode is currently 26 minutes long. I've been speaking fairly quickly throughout it. I've not taken any breaks apart from at the very start where I hit the pause button to do my hair. So, effectively from your point of view, it's been a constant stream of information. Please feel free to watch it twice so you can get all this and actually take it in properly, because this is crucial information. Looking past this area then, of course, again, like I say, to reiterate it, that would probably dispose of that for us. And we're talking about 11,850 in terms of our first checkpoint towards having happy days again. At the minute, although we have come up higher and we've done certain things which look quite positive, as a quick reminder over here on the CME chart, there is actually slight differences so far in terms of the spot prices, and as well in terms of the narrative throughout the different time frames that you're going to want to tie together if you want to become a successful trader, okay? Because that's what is one of the biggest things about being a successful trader, and being able to tie this together. Again, then on the 4 hour time frame, it's very much the same scenario, and that extends all the way back the way as well, looking between these different highs and the story that we have on the go. You've got your hidden bearish here, you've got your sort of just bearish divergence and all around there for you to see on that front. And there is a degree of bullish divergence just between these previous two lows in the 4 hour time frame, as we put in that low just coming into the weekend and going over the weekend period there, which led to this upward slide and has indeed created that gap on the CME charts. And that's tying that narrative together for you. I wouldn't write home about this one just now, because we've kind of, you would have wanted to have written home about that again then maybe on Friday or Saturday, because that's where it's taken us to now and giving up these opportunities for us to be able to sort of capitalize on, or indeed manage our risk on, if we were to see things change in these zones. I've been very, 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 very clear on this, and in fact going beyond the 90% that I normally do in terms of doing your trading for you. So I really hope that you just see that value and hit that button. Now, what have we got here is this high here followed by a subsequent high on the MACD, and it's lower there for us as well. So we can see that the MACD has begun to get that bearish divergence for us. So we just zoom in a wee bit more, then maybe what we could also say is that if there's a MACD showing bearish divergence, maybe it's time that we start to look for a wedge on the go. And that's another key takeaway that you'll learn nowhere else in no textbooks. Nobody talks about it, because it comes purely from experienced trading. And I hope that you then can see the value of that and apply it to your own trading, and then of course credit where it's due. That's a Rocky Outcrop competition unique facet in terms of being able to learn how to use these charts and tie it all together. Successful traders will keep these informations to themselves normally, and indeed, of course, as you know, I don't get any money from advertising on YouTube and everything else. This isn't where I make my money. And what I'm trying to do here is actually give you the keys to the kingdom so that you can become a self-reliant, successful, independent trader and integrate this information into your own techniques and your own armory. And that's a very, very good one. What does that spell for you? Well, that spells out a rising wedge, and wedges are generally speaking bearish patterns. Now, of course, as well, if we were to take a full measured move on the back of that thing, where would that potentially take us to? Well, it only really comes in here coming in with a higher low overall. So you could reassess things along the way, and that would maybe give the oscillators a chance to reset. But I would just say that if you're looking at this with a hella bullish attitude towards this at the start of this new week, that maybe you should temper that slightly with the information that I've given you until such times as we've gone past zones which actually make it so that is no longer the case. What happens, I'll just ask you real quick, if this bearish divergence then dissipates on the MACD, what would that be in terms of price action? Well, you probably see this turning into a parallel channel thereafter. And where does that put your high in at? Well, first off, you'd be looking towards that 11.8 area. But if this turns into a parallel channel, it could even bring us up to this area up there at 12K. And then you'd have to reassess things yet again from the broader perspective, because what we'd have done is put in a high over here compared to that 11.8. Would it be a bearishly divergent high on that front? Would we actually have turned around the trend or not? And how would things then respond thereafter? Could it then move back down towards these areas, be a retest and give you a chance to re-up, and then, therefore not experience FOMO and moves past these zones? Quite possibly. So I would then say watch out for being greedy in terms of entering into positions, but you can obviously begin to become bullish if we see things come up here in a healthy and coordinated manner. And that is going to do for today's episode. Like I said a million times during it, if you're getting the value, which I dare say you should be, because it's very, very clear, and I'm doing a very, very good job here. I know I am. You don't need to tell me. I know I am. So if you're doing that, then hit that button to subscribe and share it with your friends. As you'll know from looking at the stats in these videos, that I get very, very few video views on the Bitcoin video. And that is, of course, a travesty when you talk about the information that I'm putting out here, because I don't see anybody putting in even a half as good information as this and technical analysis on the internet on a regular, consistent basis as I am here for you all. Now, of course, that does mean to me that I've got a choice ahead of me. Either I keep acting as I mean to go on, like I have been since I started the channel, putting out this incredibly good quality, high, good value information, or I actually do videos which are commensurate with the quality of the views and the feedback that I'm getting. And obviously, now don't feel bad if you have given me good feedback, because I know you have. I'm just talking about the lack of the deficit out there between the quality that I'm putting out and what's coming back in return. Now, let's be honest, maybe I ought to be doing, instead of this half an hour long video, which is full of incredibly good information, which is really going to set you up for not only a good week, but a good end of the month, and a really, make it so that you're a successful and independent trader who can really impress everybody with your knowledge and your ability, because you will be very much at the top of the market, top of the game. Really, nobody out there is doing a better job. And I haven't even mentioned things like moving averages and whatever in this episode. I'll be coming back to talk about them tomorrow. I have talked about little things such as, there's the 50 and simple. And as you can see in the 4 hour time frame, there is a death cross on here. And we've actually just touched the 200 so far. We could maybe go down to touch the 50 simple. That would be filling out that gap. And for instance, and numerous other things along the way. I could be talking about that, but I just don't have the time. And how am I really expected to go on and put all of that even better, even more comprehensive data out there when I'm only getting something like 50 views on a video, when other people, and this isn't an apples and oranges or comparison thing. I'm just saying that when other people out there are putting out very, and they're getting thousands upon thousands, multiple thousands of views. So if you like this video, hit that thumbs up button, share it with a friend, and let's see if we can beat the shadow ban that's on this account from YouTube. They don't want me to be successful for whatever reason in terms of the video viewership numbers, and I think this video speaks for itself, or at least you've got me speaking in it anyway, being pretty explicit about the value that's there. So, show that back the way, hit the subscribe button, share it with your friends, share it on Twitter, share it on Facebook, let people know, because this is seriously good stuff. Now, of course, prior price action is not necessarily going to determine the future of things. None of this is financial advice, and I'm not a financial advisor. And of course, always do your own research. All of that stuff, of course, a horse, of course, right? But, that's pretty good. I'm tuning out now. I'm Rocky Outcrop, youtube.com/Rocky Outcrop. Share it with your friends. They want it, that they need this. And, take your trading to that next level. Thank you so much for tuning in. I really do appreciate it. I'll see you again tomorrow.